Hi, my name is Diana. So I have founded Xaalys. Xaalys is a neobank targeting teenagers from 12 to 17 years old. We've started operating 6 months ago. I went into that space for 2 reasons. First of all, I've spent 10 years in banking, so I saw the revolution from inside. And I also happen to be a mother of 2 kids, so the idea was really to build a solution I would like to use as a parent to teach my kids how to be at ease around money.
Perfect. Thanks, Diana. Marco.
Hi, my name is Marco Ventin. I'm CEO of Penta. Jason and I, we know each other for quite some time now. Before Penta, I founded Xaalys Bank. That was a platform in order to drive the disruption in European fintech. And now at Penta, what we do is we do not talk just as a neobank, but we really want to see how the actual company management can be digitized in a much different way. And banking is one starting point, but it's definitely not the end game.
Great. Michael.
So my name is Michael, and I'm the founder of Twisto. We started off as the Klarna of the East, so providing that buy now, pay later solution for e-commerce. But we evolved into actually providing daily payments and actually really attacking the daily wallet of the customer. We're not here to kill banks. Actually, we have a bank as a shareholder. So the rhetoric is really, the future is about cooperating with banks and creating solutions that enrich the customer on daily payments and instant financing, and that's what we do.
Hi, my name is Norris Koppel. I'm the founder and CEO of Monese. And I started Monese because I couldn't open a simple bank account in a new country, so that prompted me to come up with this. And the vision here really is to build a truly international banking service that is available to anybody, anywhere. You move from one country to another, you just have one bank in your pocket everywhere where you go, making things easier, cheaper to run, and so on.
Great. So we've got multiple countries across Europe. We've got teenagers, business banking, starting from immigrants, starting from lending. Is that all within the neobank label? Has anyone got a definition for, like, what's a neobank, given that every bank out there has an app? Could they all not say that they're neobanks as well?
I don't know who want to go first. I'm going to share a very personal definition of what a neobank is. First of all, for me, a neobank is a 100% mobile and digital solution. I think what really differentiates us from traditional market players is that we are really very focused on customer experience, user experience, and on real-time money and solution management.
But Marco, surely, I mean, you've worked in a big bank as well. Surely the big banks would say, well, we focus on customers, we focus on experience. Are we just saying that a neobank is a traditional bank without branches?
Well, I think you will not like to hear this, but when I say, because one of the banks you co-founded was Monzo, when you just look at this space, like the Monzos of this world, Revolut, etc., essentially, if you really take away the entire marketing stuff, it is nothing else than just a Crédit Agricole, just possibly nicer, maybe a bit more customer focused, etc. So that is obviously a going in for have a nice discussion. But what I think is neobank, the definition of what we should take it for should be broader. Not just going just from the, not building the same thing which has been in existence for 100 years and just making it nicer, but there has to be some added value, something which is a secret sauce, and that cannot be just the, let's say, the customer centricity which everybody claims to have.
Michael, is this true? Are you just a traditional lender with a nice bit of marketing over the top?
That's a very black and white way to put it. No, I think... So I think, to be honest, neobanks ultimately are becoming banks. And I think even if we look at what we do, we haven't reinvented finance fundamentally. I mean, we are doing it in a much more efficient way. On the cost side, we have a much better UX, so it's much more customer friendly. But ultimately, it still works on the same principle of traditional finance. I mean, we lend money for APR, we borrow money and try to make a margin. So I mean, neobanks is just a nice label, but ultimately we are all trying to do finance a little bit better for the consumer. But I don't think we have fundamentally redefined finance. And the point, neobank, just a nice label that helps people compartmentalize, oh, he's a neobank, he does this. But the consumer actually doesn't care. I mean, he doesn't care if it's a bank or a neobank. He just cares, is it simple? Can I get it now? And is it cheap? That's the only thing he cares about.
In my view, neobank is a company that basically has two key fundamental differences compared to a traditional bank. So one is customer centricity, because we start from that point. So the same way Apple was founded, it was design-led, and technology and everything else kind of had to fit around design. So I think we, as neobanks, we are focusing on user centricity, making sure that we ask customers, what do you want, instead of asking regulators, what do you want, regulator, or asking our investors, what do you want, investors. We ask customers first, so we are customer-led, and then we take it from there, basically. And I think the second luxury is that we have this enormous luxury of starting from scratch. So we are building things right now. I mean, you know, all of the neobanks are less than 10 years pretty much old. Cloud technologies, mobile technologies, we right now have things that never been possible before in human history. We take full advantage of that, and this gives us speed, agility, and of course, it gives us better way to approach customer centricity as well.
So I'll maybe challenge you on one side, because I think you rightly say, banks would say exactly the same. Like, for example, you also say, you know, you're customer-centric. So I think the key differentiation is maybe offering. So banking today, it's very much plain vanilla. I mean, I have a debit account, I have a credit card, I have a loan. And very often you have kind of different apps or different logins and internet bankings for that. And ultimately, I think what we're doing, we're putting it all in one app. And I think that's actually one core benefit. Second one is we are launching new features almost every week. And I think that really differentiates us.
So I think I would disagree with most of you, because I think that I would say that banks are commodity product manufacturers and distributors. They make a box, they make a little widget, it's a loan, it's a credit card, it's a mortgage, and then they distribute those through various channels. And their systems and their silos and everything is organized around these products. So to Norris's point, the regulator is interested in regulating product, just, you know, creation and distribution. So my view of a neobank is that it isn't about a product, it's about an intelligent service. And actually the big shift, and where we're only just on the journey of, is that customer centricity really comes about bridging that service gap between, you know, is being a bank just saying, well, we'll keep your money safe, give you a little interest, and you can access your cash, and we'll tell you where it's gone, and you can transfer it, but everything else in your life is fine. But when it comes to getting to the end of the month, dealing with recurring payments that happen annually, quarterly, monthly, loyalty, rewards, separating money out into my discretionary cash versus the money that I pay for my bills, like, that's more than just a financial product for me. That's a service. And actually that operating model and that paradigm is very different from what you would find in a big bank.
I think this, what we were always talking about is the context. So contextual banking, contextual finance, etc. So it's not the actual product. People are not interested in products. People are interested in a job to be done. So basically, that they have one thing, they have an issue, they have a problem, and they want this solved in any way, shape, or form. And what has to be done, and this is where, from my perspective, neobanks or younger companies, they are much better in solving those things in the context of life. Like you, Diana, with the whole thing, the context of life is not banking, but it is to educate not only your kids, but kids in general, to work on financial literacy and bring them early on, because that's such an important part of our life, the management of the finances, and that's the contextual part. It's not the customer group, adolescents or kids, it is the education behind that. So that's the context.
So Diana, is this just about a standard debit card that's funkily designed, or is there some service or some need that you're...
No, there are really some services, like really the backbone of everything is not that much the debit card, because the kids only want the debit cards, don't get me wrong. They're very happy to pay as adults. But what is really important in everything we built was to say the backbone of everything we want to do is financial literacy, as you say, enhance financial literacy. So the application does, of course, come with a debit card, but it also comes with different features. It comes with the possibility to prioritize what you want to buy, to get some perspective on the accumulated needs and the accumulated cost of everything you want, to do money pots, to decide, depending on whether you want to buy a new pair of sneakers or you want to buy a gift for somebody, who you're going to associate with that, to put money aside, and also to be able to have really very transparent and frank discussions about money. And just like to jump on what was said, I think what is really important, at least for myself, I do not define myself as being a competitor of traditional banks. I think I bring something else. You know, the bank's role is not to educate your kids, is not to do your job as a parent. So what we can do as neobank is really address some niche, very specified subjects, needs you can have. Like for a lifespan, it could be 5 to 7 years. But then, of course, when my teenagers grow up and they need a credit, they need more structured financial solutions, of course, they will go back to more traditional banks. But what really is important is to say that since we are neobanks, we are more agile. We are able to do very quickly, very more stuff, to iterate very quickly, and to build really highly tailored solutions to address a pain point or a problematic.
So I hear you there, because to be successful in the market, especially a commodity product market, look, every bank is pretty similar to every other. You know, they all have the particular color of a credit card or a debit card. Their interest rates are pretty similar. Surely that's why it's supposed to be so difficult to make any entrant into the market at all. I mean, what is the differentiator in each of your case? Norris, should we start with you? I mean,
yeah, absolutely. I mean, our foundation really relies on making things possible to those people where it wasn't possible before. So we're not talking about only access to banking services in real time, sort of identity checks and so on. I'm talking about access to credit as well. So for example, in your own country, you may be eligible for credit cards and loans and everything else. But typically when you move countries, all these accesses, poof, they go away. So how do you make sure that we take customer data and transport it to new jurisdictions and make things possible for you? So I think we are very sort of access-led.
Michael?
Yeah, so for us, so our customers are around 28 years old. All of them have a bank account, so all of them are actually banked. All of them use Apple Pay and Google Pay. So on the debit side, the banks provide them with a very good product. But on the credit side, what banks typically do today, they would love to give you a big mortgage or a big loan, but nobody cares about financing those sneakers that you buy in that store. And that's ultimately where we come in. We're, for the customers, a first credit product in their lifetime, where we provide incredibly simple, transparent product that they can use on a daily basis and even finance, you know, a nice pair of sneakers within a couple of clicks within the app. So for us, it's about providing a very simple credit product when the customer needs it and give him full control over that product. And that's something that actually banks are not providing in the region today.
Right.
Well, I mean, Penta, you know, there's plenty of business banks in Germany, surely. I mean, people can just sign up. Why go for a new player such as yourself?
Well, there's a couple of thousands to begin with in Germany. It's not like in the UK, where you have basically 5 major banks and a couple of sideliners. We have a very, very high number of banks. The issue is, however, and this is where we started out, is in order to start your business, you need a bank account in order to start trading. Without the bank account, you cannot start trading. But the bank account is just one moment. So the opening of a bank account is just one moment in time. It's a journey, and this journey for us already starts 4 to 8 weeks before you found the company, because we already help our customers before they become customers with the foundation of the company. So we're delivering documents for the foundation, etc. And again, solving an issue which they have, because thousands of founders making the same mistakes over and over again. And why would you do that? And exactly there is where we start. We get them at the point at their need. It's kind of the education for kids, and bring them on, have a very fast process. But then it's obviously the life cycle goes further. It's not just the starting, but it's then the entire chain. We're just 2 years old, so we cannot say that we have been now for, long enough in the market in order to see a long, let's say, a cycle there. But it's grabbing the problems which our customers have, solving them so that they can concentrate on their core business. Because the bureaucracy which everybody has to deal with is absolutely mind-blowing and just takes away focus from your business.
Yeah, I remember this quote that banks need to be more like great waiters and less like bad landlords. And there's something about anticipating what people want, like going beyond the, well, what can I get you from the menu? It's like, well, what kind of thing do you like? Oh, I see it's a party. Let's get into the context. As you say, I spoke to the VP of, I think it was Alipay, and context was the word that just kept coming up in the conversation. Is that something you find?
Yes, I think what is really, really important is, you know, what we usually see in traditional banks, as you were saying, say we have a catalog of products, and there are plenty of products. So normally, when you are normally set, you can find what you need. I think what we do in neobanks is, of course, we have ideas, and we have plenty of them, but what we make sure of is that we are going to find customers who are actually sharing those ideas, and who are willing to buy the product. So we always go back to them and make sure every time, for instance, I don't know how you do, but every time we think of a new feature, we never deploy something before making sure that it's okay for our customers, that they like it, that the teens like it, that their parents like it. Because at the end of the time, even if we think we have the best idea of the day and we have nobody who's going to buy our product, we're just going to be doomed.
Let me jump in there, because I think it's not just when you have an idea and making the product, because what goes very, very often very, very wrong in product management is that the product manager, product owners, they take the sample size of 1, because I have an issue, hence everybody else has this issue too, which is fundamentally wrong. What you have to do is you have to talk to your customers, and that's one of the things which, especially traditional banks, say that what we don't have is the interaction with the customer, which is absolute bullshit. We probably have much more interaction with our customers than any traditional banks. Why? Because of a Slack community, because of an open roadmap where customers tell us what they need, what is, again, the job to be done for them. It's not that they say, I need this loan. They say, okay, we need something that you can tell us 3 months in advance that we come into a cash flow problem, and that we can go from there. And that is when the product development should start.
But what stops big banks from coming along and saying, well, this is great. I love your little thing. You've done some great work. You've been out, spoke to some people. That's great. We're just going to do exactly the same thing. And we'll just do it pretty quick. What stops the big banks of the world from just squashing neobanks?
Yeah, so I think kind of on that, speaking to customers, banks are ultimately decentralized. I mean, you have a headquarters in Paris, in London, in Germany. And if you look at fintech, it's one headquarters, one product team, IT guys sitting in the same building, but banks, many of them have it outsourced, and kind of too many teams across the globe. And I think the benefit of fintech is having all under one roof. And when you speak to the customer, you release the future or the feature, it actually has a bigger impact and it's closer to the customer. But again, for banks, I mean, I cannot imagine, you know, so if you have a headquarters in London and someone in Paris says, you know, I'm going to speak to 20 customers, this is the insight, and let's implement it globally, I think it's very tough. So I think that's the benefit of neobanks, is having that kind of very simple structure, all under one roof, and innovation is happening in that space of time. For banks, very tough because they are decentralized.
And I would like to add also that data is in all over place. It's in different places. The data doesn't talk to each other. I still keep getting credit card offers from the bank who, when I applied, actually refused to give me credit cards. So it's just disconnected. I think the key is that, and that coming back to your original question, is why don't banks just do it? It's very costly, you know. It's building things from scratch is the only way. But to big banks, you know, there have been a few banks who have started from scratch. There have been a couple of successes, notably in Poland, for example. But I think it's a pretty bold move to start from scratch, and you have to sort of give that sort of a young spin-off abundance of money and control as well. And banks are not really, I haven't seen really, you know, they haven't been able to give away that kind of a control over compliance, and the oversight is very tricky to let it go.
Well, I guess it depends on whether you think neobanks have fundamentally changed something. Because if you have, then the operating model has to change, the underlying technology has to change, multifunctional, cross, you know, product teams is suddenly there because you're delivering something new. I posit it's this service focus rather than product. But if you don't think that that's the case, then ultimately digital is just a veneer on the existing organization, then you just wouldn't have to change. Why not keep the same operating model and the economies of scale? Because decentralization across lots of countries is great when you can share the costs across those countries.
But let's still stick to this one point, because I think that there's many bankers, there's many fintechers here in the room and at this conference, and I think nothing should stop and stops a traditional bank but themselves. You're much rather dying of suicide than dying of murder. That's a fact. Yeah. So this is the point is. It takes people like the co-CEO of a large bank to say, okay, let's do this now and let's shake up the organization, because that's where it really starts. It starts at the absolute top, and everything what we do, we don't do wizardry here. That is just normal things any medium intelligent person could do. So we are not specifically smart. So everybody could do that. So nothing stops a traditional bank to do exactly the same thing, but themselves.
But why would they? I mean, let's imagine we're sitting at a bank board and we're like, right, how are neobanks doing? Oh, they're doing okay. They've acquired a few, a low single-digit million customers. And how have they done that? Oh, they've given them free products, or they've subsidized them with VC money. Oh, great, so they're burning money to acquire customers. That sounds great. And you want us to do the same thing. You know that we have like quarterly earnings reports and stuff. Like, we have to actually make money, not burn VC cash.
So I don't think we can expect banks to become neobanks. I mean, fundamentally, they hold a certain duty to us under kind of getting wages, doing mortgages, and ultimately what neobanks are doing, they're challenging it at a better cost or much cheaper. And I don't think we should ask the banks to become neobanks, but ultimately what we're seeing is banks investing into fintech. And I think that's the way forward, is actually banks and fintech partnering on the investment side, thinking about distribution channels, or actually cross-selling the products. So I don't think we should not ask the banks to become neobanks. They should definitely improve the processes. But ultimately, it's two different worlds, and they should run parallel to each other. They should coexist. It's not that neobanks will replace banks. I think that's a naive thing, because still, I don't see a fintech offering a mortgage for the next 30 years. So I mean, ultimately, you need banks with deposit bases offering those long-term products, but a fintech can come in and serve a different segment or different service. So I think it's about running both of them parallel. Banks are improving, but ultimately banks will not become fintech, or neobanks, and we will not become pure banks.
But it's not about becoming a neobank. It's about solving the issues the way neobanks do. That's the point.
But if they do it, what are we going to do? I mean, if really,
we can't.
And look, they have more money than we do, right? So if they really start offering the services like us, Revolut, or Klarna, then there'll be no one sitting here on the panel. So actually, it's good.
Do you think that's really true? Because can you point to any examples of either where a big bank has acquired a fintech and it's thrived, or that they've launched their own and it's gone, apart from something, apart from Marcus or something that's a pure price.
ING, I think they're good examples even in Europe. I can see that that banks have reinvented themselves properly, and this is especially when you look at ING, they have really shaken up the organization. They're using the same terminology, they're using the same organizational structure of squads or units or what have you. So yes, it's happening, and I think these are the ones which will be on the strong end after a couple of years.
And I think,
Diana, what do you think?
No, I completely agree. Like there are different things. Like banks are more systematic players. Like traditional banks, they are systematic players. The latitude we have as neobanks to be on the edge sometimes on what we do allows us to be very more agile than traditional banks who are under very strong scrutiny from the regulator. I would like to think a bit of co-petition. I think that, the fact that there are new neobanks with new offerings, very more tailored, more niche products, like highly customized, at the end, it's very positive for the end customer, because the banks who want to compete and who want to retain their market share, they're also upping their games to provide better customer experience, So at the end, it's something pretty virtuous. For me, it's not neobanks against banks, so I completely agree on the fact that we bring different solutions to different life moments, and we should not think as ourselves as competitors, but more to say that altogether we are going to improve the customer experience in the end, and everybody can bring a brick to build something great. At one point in time, if a traditional bank wants to go into a space and cannot go, or doesn't want to go, or do not have the agility to go into there, they can work with a neobank on a white labeling scheme, or they can buy out a fintech.
See, this is interesting, because this leads to actually the financial product will always be there at a base layer. You always need that thing there, that regulated financial player. But if these services actually don't have to be built into that, but could be layered on top, then suddenly you get to a place where neobanks might not need banking licenses. I mean, I guess, Monese is a great example of a player that's, according to the rumors in the press, raising money, driving things forward, but not a bank in the traditional sense.
Yeah, absolutely. We try to keep ourselves away from a bank license as far as we possibly can. I mean, if you're trying to build a truly international service, I mean, if you get a bank license in, let's say, in France, I mean, it doesn't really scale, does it? I mean, how do you take this to UK? How do you take this to US? And becoming a bank in every single jurisdiction, it's incredibly time-consuming, money-consuming, and so on. So. You have to look at what else is out there. Are there payment licenses, email licenses, and how do you put it all together? Because customers ultimately don't care. Simple. They don't care. They just want a service. They want a good service, modern service, fast service, cheap service. And if we are able to provide all this without being a bank ourselves, then customers don't care. And that's why we are able to actually be much leaner and move faster than many banks.
But I guess, this is great for fintechs, but potentially problematic for big banks. Telcos went down this route, and they used to control what was on the Nokia handset, and then iPhone, Android, and things came along, and suddenly, who cares which telco they're with? It's just a little badge in the top corner. Do we get to a point where big banks are just commodity pipes for these intelligent services that you guys are making?
So I think banks still benefit from trust, and I think that's kind of the biggest hurdle if you want to touch customer deposits, and if you actually want to service the customer on the full spectrum. Trust is a key thing that takes time to build, and I think we are very early to judge if fintech is a winner or not, and I don't think we have won the trust competition yet. So I think that ultimately takes a lot of time. Probably will require fintech to go physical. So I think branches, even though we all hate them, if you really want to go deep in the market and really not only touch the millennials or the Generation Z, you actually do need to probably go physical and provide some offline presence for the customer to actually see you and potentially touch you. So I think, very early days to judge if fintech is going to win.
See, the trust thing is one thing which I would like to definitely talk about. Not just because of the fact one is a bank, automatically has trust. One is not a bank, automatically has no trust. This is not true at all. Trust you gain through an excellent customer experience, through solving issues. And yes, a license can be supportive of that, but just because the fact that you do have a license doesn't give you trust per se. And let's face it, why do we have a strong fintech scene? Why do we have this conference? Because of everything what had happened in the wake of 2008. So where did this come from? Now, this is things which have to be talked about, and that's why I really do not think just because you are a bank, even a large bank, just look at Deutsche Bank, and I used to work for Deutsche Bank. Once this was a very, let's say, organization which every person which studied in Germany wanted to work for. Now nobody wants to work for that anymore because it has gone down a different path, and it has to seriously reinvent itself in order to stay relevant.
I think there's an interesting point about decomposing trust. I think the interviews I've done out on the street, when you say, do you trust a financial services organization? Actually, the question is, one, do I trust that they do things for my best interest? With fintechs, mostly. With big banks, generally not. Secondly, do I trust them with my money? And with banks, yes, I do trust them. With a new fintech I've never heard of, less so. But I guess to challenge the physical infrastructure point, the old bank used to have marble and gold leaf and double height ceilings.
That's not the way to go. That's bad.
But there was something about, if they can afford this, then I trust my money with them. Surely modern digital trust is about reviews. Do my friends use them? Do celebrities use them? Can I test and taste them a little bit? And then actually, over a period of time, does that relationship build up? Is there not something different in digital trust? I mean, you must face this. Do parents really sign up to give their teenagers an account?
Yes, no, I think I completely agree with Marco. I think what has also really changed today is people are really more aware and more cautious, looking on purpose of the company, sense of responsibility of the company. So when you are a new fintech, operating and you have very strong values, you stick by your values, you embed your values, you distribute a product that is completely in line with your values, and resonates to other people's value, it's easier for parents to say, okay, you're not a systematic player, you don't have a 50 million deposit background, but you seem to be somebody who is trustworthy. So trust is really something very important. And then I think the way you build it is you do it by doing different things. You need to have a very coherent brand. You need to have very coherent people working around you and delivering also an experience that might not be perfect, but at least that strives to answer the challenge you want to tackle. So how do you do it and how did we do it? Of course, like when we've started out of the blue, nobody ever heard of us. No, clearly, you know. And like we have a name and everybody's making fun of me because my company name doesn't say that I'm a neobank for teenagers. So, you know.
Sure.
Yeah,
sure.
No, yeah.
I know.
And I think the way you do it is, of course, you have like really, it's like building a house. You have to build it brick by brick.
Yeah.
You have to explain who you are. You have to explain where you came from. You have to explain why you're doing what you're doing. And then you have to start delivering. So what is very important, and I would like to rebound on the physical branch point. What I really, for instance, underestimated is the time my team spends on the phone with customers, you know, to give elements and proofs of reinsurance, like I didn't understand when I go into this section of the application, how do I do, why isn't my money here yet, you know? And just the fact of having every time you have a question, somebody on the phone, on a chatbot to answer your question, to come back to you, all this builds trust. And then it also builds recommendation and referrals. And this is how you start building up.
But there's an interesting point you bring up, which doesn't often happen in neobank panels, about brand.
Yes.
Because there is something about, you know, we know for a long time that people have buy trainers because of what it says about them.
Yeah.
And then the people they do business with, it indicates something about them.
Yes.
We haven't really seen that in financial services. It's been very functional. It's been, you know, brand, but not a aspirational brand.
Yes.
It doesn't say something about me. In this world of climate change and Me Too and causes and people, you know, wanting to live more virtuous lives, beyond technology, beyond the low-cost base, is brand a key differentiator here? I guess, you know, Norris, what is it about Monese that is Monese's brand? Do you play on that at all?
Yeah, absolutely. I think brand is absolutely fundamental, and we are not the only ones taking full advantage of this. We are seeing other players as well. I think our brand has always been sort of circulating around the same thing, which is we're going to be there for you if you need us, wherever that may be. And coming back to the trust question, for example, you know, when we started, many banks and people also thought, okay, but how do you keep your customers' money safe? That got to be the primary concern and so on. And just as a side note, our deposits are not officially guaranteed by the government. So people thought, okay, how do you keep the trust? And surely it's going to be a problem. Well, the thing is, it is not actually a problem. Which is now witnessed by the fact that we have actually enormous amount of people bringing us the salaries. So I would like to say that in the UK, for example, majority of our user base, active user base, brings us their salaries. I mean, surely that's the mark of trust, right? I mean, you trust a bank or alternative with your salaries. I mean, when it comes to bigger tickets, like if somebody has a couple of extra million to spare and they want to do something with it, maybe we are not going to be the one for them. Maybe they want to go after a more traditional routes. But right now, when it comes to, you know, few thousands or a few tens of thousands of euros or pounds or dollars, we are definitely there, and we are holding that trust. Obviously, you know, it only takes something to go awfully wrong in the market somewhere. Let's hope that they never comes.
Michael, Twisto.
So to be honest, I underestimated the whole branding thing. The first, let's say, 3-4 years of the company life cycle, because we were kind of B2B focused at first. And actually now 45 to 50% of our customers come from word of mouth. And that really comes from our investment into branding, associating the product with a certain emotion and a specific situation that we kind of solve for the customers. So huge underestimation, and over the past 12 months, it has actually done magic in terms of customers referring Twisto not only as a service, but ultimately as a brand and what it represents. So for us, huge underestimation in the beginning, and then it was a huge shift actually over the past 12 months.
I think specifically when you talk about financial services, which just by design are low engagement, so it's sneakers, it's something which you can put on, etc. So you have something which is either fashionable or it's just cool or something. Banking just in general isn't cool. Let's face it. Yeah, this is we might not live.
Come on, my hot coral card's pretty cool.
No, it's well, yeah, it's obviously that's where you want to go with the Monzo thing, obviously. That you've created there kind of this brand where people say, okay, you're a Monzo customer as well, and having it in the shops. What at Penta basically, we have one of the founders is a brand and design specialist. So this was right on the agenda from day one to create this from this perspective of the design of the brand. That's something you have to work hard for in order to get people to sign up to it. And to have this, this twist, this Twisto of whether this is trust, whether this is functionality, whether this is just coolness factor or something. And I think it's extremely important. And you have to do everything in order to underpin this on a permanent basis. And yeah, and this is extremely hard in financial services. Let's face it.
So I've saved. I'm sorry. I've saved the difficult question till now, the money question. Because it's great to talk about brand, it's great to talk about services and moving along, but banks need scale and banks need to be low cost, and when they're running on other people's infrastructure or license, then that's costly. We've seen Monzo, Revolut, a variety of players sort of scale up, Chime in the US. Everyone's really going for it, but the continual question is, well, that's great, but when are they going to make any big money? Like, what is the answer to this? Is this just a VC spending spree that's just going to implode at some point in time?
I'll go first. I think not. So I think quite few people are actually pretty close to profitability in the next couple of years. So yes, it has taken hundreds of millions possibly to get there, but it has been also incredibly fast. If you take traditional players, it sometimes has taken literally hundreds of years to get to the level where quite few of these challenger banks are today. So it takes a little bit of money or hundreds of millions to actually really accelerate fast. But right now, I think there is a break-even moment, and faster than I actually thought even. We see some of these challengers reaching, tens of millions of users, and we're talking about billions and billions of dollars of revenue here. So it's no longer something that is, this is going to be a tiny little thing, never going to make any profit. It's going to be beyond that pretty quickly now. Michael, what do you tell your investors?
Yeah, it's also a big focus. So, and it has actually changed over the past year or two. So maybe 2017, 18, it was very much about growth and proving that we can scale and actually get to a certain number of customers. But now the discussions are very much about unit economics, contribution margin. That's actually probably the most used words in our board meetings, but also during fundraising. So I think there's been a massive shift in the sentiment and what we actually expect out of fintech, not only growth, but also monetization. And I think more and more companies are looking into credit. That's a great way to monetize, or premium services, so metal card. I mean, you guys with Monzo have done that as well. So ultimately, I think monetization is the name of the game, and it's already happening, but I think it's going to be the core focus over the next couple of years. And yes, you're right. We already see neobanks generating revenues, which were kind of previously unheard of, and actually customers are willing to pay for that service, which is a great sign that it's actually working.
And people who say that we are focusing on customer growth and not focusing on revenue, these people have now apologized. That they were wrong.
I think it's not necessarily that the customers are actually willing to pay for your service. I think that's one very important thing. Is the question is, do you make money? Because everybody comes then with, yes, Revolut has to scale up to 20 million customers in order to get this relevance, etc. And everybody
but
brings
anecdotally, I mean, I'm sure
but hang on, but everybody puts
if they stop growing, that they'd be...
But everybody puts up this Facebook argument. We say, okay, Facebook was really a loss bringer for a decade or so, until they could actually put the switch and say, okay, now we are monetizing on that. That's obviously an argument. However, I think it's important that when you run a company, and call me old school, but when you run a company, you should have a clear view with a path to profitability. That can be far in the future. There can be 3, 4, 5, 6 years, but you have to have a plan for that. And yes, it is revenues. It's something which the willingness to pay of the customers directed to you, or that you can make money somewhere else, which basically your customers might not directly pay you, but you're getting money from third party, interchange being one of the things there, etc. So I think that's really important to get there.
Diana.
I completely agree with my co-panelist. I think it really depends, you know. For me, there are different types of neobanks. There are neobanks who just want to acquire a customer, and then they will see in 15 or 20 years somebody is going to buy their customer base, and they will have a nice sum of the parts, and everybody will exit fine. And this is not, for instance, the way we built Xaalys. And it was really like a discussions we needed to have with the parents, because people have to subscribe and people have to pay, because we think that we are bringing something differentiating on the market. So of course, when we built the business plan, we are not going to be profitable, not this year, not next year, but we have a path, and we wanted to build something that could be sustainable. We didn't want to build, of course, we are fueled with business angel and VC money, because we need to get going, we need to fuel it, we need to start it up. But the idea is not to build a neobank model or a business model that is never going to be able to be sustainable by itself, because it means that at one point in time, if we do not get money injection, we will die, you know?
Yeah.
But I think it's also important when you work on new innovative ways of doing business, of also having like the right money injections to prove your point, to start get going. But at one point in time, you need to have an idea. I completely agree with Marco.
So,
to monetize your business.
So for a startup lightning round, for a startup starting now, how many years will they look ahead in order to reach some level of profitability where they're stopping their burn, do you reckon?
It depends who we are talking with.
Financial services, neobank in some like side, you know, in some specific country in Europe. Anyone willing to?
Yeah, I think it has to go down, because what we have seen is starting a new fintech or a financial services company 10 years ago was a different story. Today you have more than one platform you can choose from. You have a much different cost base.
Yeah.
And there's so many things out there which you could already have learned from. So I guess when you start something today, you should have a 2-3 years horizon where you can actually start to make money.
Great. I could talk about this stuff all day, as you could probably guess. But I'm going to open the floor up to questions. We've got 5 minutes. Who's got a burning question to ask about neobanks? Come on.
Hi, everyone. I've been visiting a few banks like you in Spain, France, and the UK. Today we speak about neobanks, but we speak about mobile banks as well, challenger banks. And I would like to know what's the correct term. Is it neobanks, mobile banks, or challenger bank? And can we get together and agree on a common name?
Yeah, so these are just terms used by investors and banks. But again, the customer doesn't know, and probably would scare him. All these names would scare him. So yeah, I mean, it's just a term for investors and for our community here, but the customer doesn't care and they don't even know.
There you go. Who's next? Well, maybe I can ask you a question. Oh, sorry, did you have one down here? No? Go for it.
Well, just a concrete question. I mean, you were talking about profitability before. I mean, when do you expect that your company will become profitable for 1 year?
Is that a question for me? Or?
Yes.
We will break even in next 2 years or less.
I think it's an interesting thing of like the conversations we have with banks about the business cases for these things. There's the banking level business case, net interest margin, fees, charges you make from a product. And then there's the service level stuff. And when you look at digital players, how do they make money? Freemium, premium, subscription based, ad supported, affiliate fees. And actually it's going to be an interesting place, I think, to see how those things come together. And indeed what happens with open banking where, you know, people can make money on this side but not on the product. Any other questions? Orders of magnitude for revenue scale?
I can take a wild guess here. I have heard and seen numbers in about maybe 300 mil range.
There you go. Gentleman over here.
How do you see competition with regards to telcos?
Telcos?
Yeah.
I could take that, for instance. And I'm going to share like a more personal example. I do not see telcos as competitors. So for instance, what I did, so we just organized a new fundraising, and our new corporate VC is a telco. And it was very interesting, and actually I was very eager to have a telco, because coming from the banking space, the financial services space, it's very difficult when you're operating a neobank on a niche market. When you're in bed with one traditional bank, it means that you cut yourself off from certain opportunities, business opportunities with others. So the way we saw it was to say, okay, everything we do, at least for us, it's smartphone-based. So at one point in time, why should we go back to the smartphone providers and see how we could work with him together in a global scheme? So we will bring the financial services, which is not his core business, and he will bring the smartphone, the platform, the clients, the customers. And you see, for us, it was so far so good, but it's a very virtuous cooperation, because we bring our expertise, our know-how, our financial services, our product, and they bring the terminal, the know-how, the customer base. So it's for me, it's not a competition. It's really a good cooperation. Sorry, I didn't hear.
The mobile service that they launched.
So it depends which telco you're working with. So as a matter of fact, I'm working with Big Telecom. And Big Telecom, contrary to Orange Bank, didn't go into the space. But I also happened last year to have discussions with Orange Bank, and the idea was more to say, okay, we're more on the 18+ space, and we would be interested in having something Xaalys-like, white labeling, let's see, to acquire earlier customers from 12 to 17, and then we can put them in our platform.
I think it's interesting across the world where, we've just been doing some work in Hong Kong, and there, out of the 6 or 7 new banking licenses, most of them are groups of retailers, telcos, high-tech companies, banks. And the number of multiple retailers, supermarket chains, telcos across the world that are looking to say, how do we start to embed financial services at the point of need and leverage our brand to do something more, is definitely increasing. Unfortunately, we have to stop there. However, I think myself and the panelists will be outside for the next 5 or 10 minutes if you've got any burning questions. All that's left to do is to thank this glorious group of people. Diana, Marco, Michael, Norris.